Okay, so imagine this. It's January 5th, 2026. The year is barely a week old, and the world wakes up to a crisis that sounds like it's straight out of a political thriller. The entire security structure of the West, something that's been solid for almost 80 years, is suddenly threatening to just shatter. So let's get right into what happened. I mean, just let that sink in for a second. That's a quote from the Prime Minister of Denmark. A statement like that from one NATO ally about another, it's just unthinkable. It's the kind of thing you never, ever expect to hear. So how in the world did we get to a point where those words were even spoken? Well, here's how. On that day, January 5th, 2026, the White House officially confirmed that, quote, all options are on the table to get Greenland from Denmark. And yeah, you heard that right. All options. Absolutely included the threat of military force against a founding member of NATO. Now, what's so crucial to understand here is that this wasn't just some, heated argument between diplomats. No, this was a direct challenge to the entire global order that's been in place since World War II. The very thing designed to prevent major conflicts was suddenly at the center of one. This, of course, brings up the million-dollar question. Why? Why would the United States risk tearing apart its most important military alliance for a sparsely populated island of ice? The answer, as it turns out, has nothing to do with emotion and everything to do with cold, hard, strategic logic. When you dig into it, the Pentagon's reasoning really boils down to three absolutely non-negotiable points. For them, having control over Greenland isn't just something they want, it's something they feel they need. So let's break down what those three things are. First up, the GI-UK gap. That stands for Greenland, Iceland, and the UK. It's the critical naval choke point you need to control to keep the Russian Northern Fleet contained. Second, you have the missile shield. Greenland's location is perfect for radar bases that give you precious extra minutes of warning against new hypersonic missiles, time that you just can't get from bases in, say, Alaska. And third, resources. Greenland is sitting on one of the biggest deposits of rare earth minerals in the world, and those minerals are absolutely essential for breaking China's chokehold on the supply chain for modern weapons. So you've got a direct military threat inside NATO. The entire global security system is wobbling. You'd think the financial markets would be in an absolute freefall, right? Panic everywhere? Well, this is where the story takes a really bizarre turn. The markets, they barely even blinked. And this slide just perfectly captures that disconnect. I mean, look at it. On one side, you have the geopolitical reality, a crisis that could end the most powerful alliance in history. And on the other side, you have the market's perception, total calm. Volatility was near historic lows, Danish government bonds were totally fine, and defense stocks, they were trading as if the next 10 years were going to be completely peaceful. Let's just focus on one number, 14.5. That was the VIX, the market's so-called fear gauge. It's basically a measure of how much chaos traders are expecting. A level of 14.5 is, well, it's sleepy. It's the kind of number you see when everyone thinks the world is predictable and safe. The market was completely asleep at the wheel. The analysts behind this work just nailed it with this analogy. The market was the frog, happily swimming along, completely failing to notice that the water was slowly but surely coming to a boil. It was looking at a clear and present danger and just not pricing it in. So why was the market so calm? Well, part of the answer lies in something called the reverse Suez dynamic. See, back in 1956, during the Suez Crisis, the U.S. used its financial power to force the UK and France to back down. But today, the U.S. dollar is so dominant that Europe just doesn't have that same kind of weapon. If they tried to use financial pressure against the U.S., it would boomerang and cause massive damage to their own economies. And here's the most crucial takeaway from all this. The market wasn't just wrong. Its whole model for understanding the world was broken. We all took a fundamental assumption for granted, that our core alliances were rock solid. That's been proven false. It means we have to actually rewrite our map of global risk. And here's the new entry on that map. We have to formally add alliance stability as a core risk factor. For decades, we treated the stability of groups like NATO as a constant, like the sun rising in the east. The Greenland crisis showed us it's not a constant at all. It's a variable, and a very fragile one. Now, this updated risk matrix shows you the real-world impact. It's not just about adding a new risk at the bottom there, alliance rupture. Look closer. The very existence of that new risk makes all the other crises more likely. The chance of a U.S. fiscal crisis goes up because nervous allies might start selling U.S. bonds. The chance of European debt stress goes up because now they have to fund a massive military buildup on their own. And this, right here, is probably the single most dangerous finding in this entire analysis. The big pillars of our global system, our security alliances, our financial markets, our trade networks, they're not firewalled from each other anymore. A crack in one now sends tremors through all the others. These risks are starting to feed on each other. So after all that, what does this actually mean for you? Why does this high-level geopolitical drama matter? Well, it matters because it fundamentally changes the assumptions that almost all modern investment strategies are built on. Let's just be really direct here. First, that low VIX we talked about, it's a trap. It means insurance is cheap precisely because the market is ignoring obvious dangers. Second, that classic idea that government bonds will protect you when stocks fall, that relationship is breaking, especially when the U.S. government itself is the source of the instability. Third, yeah, defense spending might go up, but those stocks have already priced that in. What they haven't priced in is the incredible economic pain of actually paying for it. And finally, the U.S. dollar. Its status as the ultimate safe haven is no longer unconditional. Now, the point of all this isn't to make you run for the hills. The goal isn't panic. The goal is preparation. Understanding how these old frameworks are fracturing is the key to building a resilient strategy. It's about stress testing your own assumptions for a world that looks very, very different from the one we've known. So I'll just leave you with this question. We are watching the fundamental architecture of the global system crack and weaken right before our eyes. The old rules just don't seem to apply anymore. So the question you really have to ask yourself is, are you ready for whatever comes next?